Hello, trading is closed on April 26th, 2018. Yesterday's call was for a rally with a pattern with an early low and a late high, and we got that. During the day, BJT said this rally was a false move, that prices would retrace to undercut this line, which they did. Well, what about tomorrow? We don't have any BJT signals. This is a pattern which almost always closes at the day's high. If it doesn't close at the day's high, and when it can't close over this middle of the day high, it's negative. It leads to lower prices unless we gap up, overtake this high quickly. And the fact that we did that right after the close means it isn't impossible, but it's actually not a positive sign that it happened so quickly after the close. It means the amateurs are willing to bid the prices over these high, but the professionals aren't. This is a strong resistance area, as we'll see. It's also a possible end of this leg. Here's your TDST line. We bumped right into it and couldn't hold it. That's not good. But that's not the only trouble. Here's your prior consolidation. This is a clear Fibonacci target of the prior consolidation, so it's natural resistance. In addition, after having an impulsive move down, we've moved straight up for 2 days. Not only couldn't we overtake these highs, we couldn't overtake any of the highs prior to this quick impulsive move down. It's a sign that this is a corrective move. The general idea is that we have an impulsive move down, followed by an ABC, and once the ABC is over, we're going to have a big third leg down. Now, finding the end of impulsive moves is one story. Finding the end of corrective moves is not so easy. Here's an illustration. This has been my wave count for years. Everyone has wave 3 ending here. There was an ABC. At the time, I think it was logical to think it was the end of the fourth wave. This wave up is an ABC, can't be counted as a 5-wave pattern because there's no third wave. So from early 2016, I knew we were in a corrective wave of some kind. The question is, where would it end? Well, could have ended here, could have ended any one of a number of different places. By the time it finally ended, there was a beautiful pattern which called a high within 1 point. The point is, any one of these lines was a potential end of the corrective wave. All you could say is you were in a wave B, it was going to correct at some point, and some places made more sense than others. Today's close is a place that makes a lot of sense. Here was the wave count we had yesterday. We had a lot of fib resistance at 27.43, but you'll notice we stopped right at the fib target here. If this is the count, and if that's A and that's B, there's a fib retracement. This could be the end of wave C, red C. But as I've said, when you're consolidating, you can make these waves say almost anything you want to. What if that isn't the count? What if this is A and that's B? What if wave C ended here? It's very suspicious that we have this wave down and then we correct exactly 61.8% before we run into trouble. Now, I don't like counting this as 5 waves. I don't think it's the cleanest count, but at least it's possible to do it. 1, 2, 3, 4, 5. And there's your 61.8% correction. Now, what's interesting, just playing the devil's advocate, if this is wave red 3, you'll often see a relationship between the intermediate waves here. You can look at wave red 1 here. Here's your 1, 2, 3, 4, 5. Set that as 1. Make that 50%. And you'll see the relationship between that one and that one. They match. And if you set this as equal to wave 2, and you look at wave 2 here, I mean, you have yourselves a match at 23.6%. So far, this down wave and this down wave have a Fibonacci relationship to each other. If that's blue 2, which isn't a settled issue at this point, we're going to have something like this third wave. So this is one of the prices at which this consolidation could top out. It's not the only one, but it's a plausible one. Bulls need to break over this high promptly, ideally by gapping over it, gapping up, and taking it out promptly should help. But tomorrow's pattern is the one with the early low. If we are going to have a rally first or a gap up first, which isn't precluded, it typically doesn't last very long. So if we don't take this out fast, ideally by gapping over it, lower prices should print, and there's at least a plausible count which says this is the end of the up move and much lower prices are starting from right here. Early trade should tell the story, and that's today's call.